But meanwhile, Richard Harris with us this morning, just to give us a sense of and how to make sense of all of the events that are happening. Dr. Harris, great to speak with you as always right here on NDTV Profit. Let's start with your take, if any, on the kind of fund flows we've been seeing in India. It's been just unidirectional so far, exit towards the door, but we have seen a change now, in part due to MSCI rebalancing, maybe a whole host of reasons. But do you think that there could be a change in sentiment?
I think so. I mean, India has been on the downtrack maybe for a couple of months after a very strong period of performance where I think people were maybe looking to take profits, a little bit worried about what Trump might do. But I think generally what we're seeing is the noise coming out of the potential Trump administration kind of favors India. Because if you are looking at more tariffs on China, obviously that's not going to be particularly good. Or indeed with tariffs on Canada or Mexico, which sounds pretty bad for them, and also for China, which has been exporting a lot through Mexico. So that really leaves India as a beneficiary from all of this. So I think there's a little bit of recovery going on, but also a little bit of the feeling that, well, maybe India's going to have its nose slightly ahead in terms of these policies.
Hi, it's also Samina joining in. Up until a few days ago, the big worry for foreigners selling or buying into India was that India is an expensive market. The risk reward is clearly in favor of US stocks, for now at least. And with Besant coming in, it of course seems like pro-US, pro-domestic smaller businesses could enjoy the party a lot longer. So what's changed? Are you buying into India right now? If you had to recommend to your clients, would you say stick your neck out and say buy into Indian markets?
Well, I'm being cautious about buying overall. If you're looking at emerging markets, I think India probably is the pick of the bunch in terms of the fact that it does have a lot of momentum there, in terms of the fact that there is quite a lot, I know, of the grassroots investment going in, because the manufacturers do want to diversify a little bit out of China. So, as I was saying earlier, I think it's advantage India, if you're going to take a tennis analogy, in terms of all of that. Of course, looking further into next year, we need to say, are the markets going to continue as they are? Is global sentiment the kind of risk on sentiment that we've seen pretty well through most of 2024? Is that going to continue? So the Indian markets will only continue to move on ahead as long as global markets are relatively normalized. And by that, I mean that there is enthusiasm and hope and the kind of movement we've seen in the markets through 2024. I think going into 2035, life is going to be much harder. So probably what you're saying is, yes, I would keep my allocations to India, and I'd keep them up to a reasonable level compared to other emerging markets. But I think investors do need to keep an eye out for what's happening on the global stage.
In equity or Indian debt, it seems like we'll have elevated rates for quite some time. And that makes us slightly better placed than some other paper that's available in this part of the world.
Well, I think in terms of, debt and interest rates, I think what we're likely to see in the States is, yes, we may see a tick down, but also we may see them move up further in the year, because many of Trump's policies are very inflationary. So we do have an issue in terms of that. But I think generally investors should probably have a focus more on the equity markets than the debt markets. For the reason being that equities do tend to hold their value somewhat during higher inflationary times.
Dr. Harris, I'm just trying to get a sense from you on, and I just want to take forward a point that you made earlier in your comments, where you said that the commentary or the noises coming out from the Trump administration, or soon-to-be Trump administration, which is against China, seems to favor India. Although there is no explicit statement favoring India. What's to say that the protectionist regime doesn't extend to India as well? Why would you see this as positive India, and in what real substantial way would that play out?
Well, it's all relative, isn't it? You know, if China is really a big competitor to India in many areas, and certainly in terms of international investment, you know, it may seem simplistic, but international investors often do lump in non-US, non-European markets into a grouping, which of course is wrong. So that's why I think India is likely to benefit on a relative basis. Of course, if the US goes super isolationist, then all bets are off. But I think if that happens, that fits into my earlier statement, which is that if we do see a turn down in the West, of course, markets, especially emerging markets, are not going to be able to resist that. But again, I say that India is likely to be a relative beneficiary to many of these measures.
Well, thank you, Dr. Harris. Great talking to you this morning. Thank you for giving us a perspective. So while we may not be a preferred bet in so many ways as compared to our peers in the emerging market pack, India does look like a relatively good proposition for foreign investors.